I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Our futures are higher this morning after stocks rallied to new highs yesterday following the Fed's surprise announcement that they would in fact not taper. Now, we like to look for clues, and there were trends already in place leading up to the announcement, not only in our markets, but around the world.
Yeah, world markets started to act much better. You know, to start the year, we all know Japan was in fuego. Japan was on the move. Abe was doing what he was doing. And then, you know, come May 22nd, you had a little bit of, or not a little bit, but in that market, it was a little bit of a correction because it was up 50%, pulled in 20%, and then got back its footing. Okay, China, which everyone was obsessing about, a crash landing, wound up getting better data over the summer, and it had a double bottom. You take a look at these charts real quickly to see, do you want to be an equity bull? Okay, well, here was the rally that started in November. Okay, definitely, got a little wishy-washy on this outside day, but then look at this, little hangman bottom, we call it in technical land. Then we've consolidated. You had a gap up here, moving average caught up. Boom. And we talked about buying the dip as an opportunity here in Japan. Then you go to, China, which everyone was obsessing about. All the bears were saying is a credit bubble, blah, blah, blah. P.S. Here's your double bottom. Quick little technical term. June, July, double bottom, gap up. What happened? It held the gap, digested. And then you have a higher low, higher low, higher low. Broke a downtrend, which is hard to do. Extended, let the 8-day catch up, and then you had follow through. So you talk about world markets getting better. You talk about Europe that was supposed to implode last year. That's what every bear said, right? European Union was going to break up, and meanwhile, lots of those countries are at 5-year highs also. So heading into yesterday's Fed, our markets have been trending well, but sometimes the speed is what could throw some guys off if it happens very fast.
Right. Well, speaking of speed and powering through, you've talked for about 2 years now of the S&P road to 1,700, and being as we've powered through that, now how do we adjust for that?
Well, we actually touched 1,700 a few months back, and that's when I said, I'm like, you know what, maybe we could hit 1,740, 1,760, but let's see what type of correction we have, because you never know what type of correction you're going to have until we have it. And the reason we set the road to 1,700 was because back in 2012, remember, everyone was declaring equities dead. You can't, it's going to be different. The world's changing. Okay, the world's going to keep changing and the market's going to keep changing. But if you look over historical data over the past 30 years, if you've been investing in the equities market with the plan, even if you were a baby boomer and started in 85 when you were 30. Okay, you survived the 1987 crash. You survived 1998. You survived 9/11, 2001, the financial crisis of 2007, and now we're at historic highs. If you got worried and if you sold the bottom or you chased the top and you didn't have a plan, you're probably not in a great spot. If you trade the markets actively or on an intermediate basis like we like to do here professionally, there also is signs. You look at this trend from November, okay, and look at the strength of it. Here's where it started with, a little red dog reversal way back here. Boom. Okay. Then after your outside day on the last big Fed event, what happened here? A trade down to the 100-day before, reclaiming it, digesting, and breaking back to the upside. Then you had a new high here. This was the first time we touched 1,700. From there, everyone gets excited. That's when we pulled back, and what happened again? We held the trend line. We could have broken it. Again, could have seen what some people were saying, a 15% correction or whatever. We turned higher, reclaimed the 50. This was your spot as a professional to perhaps get some risk back on. Here we digested higher, and then yesterday you had 1709 as your pivot point. Closed at 1725. We're opening up a little bit, probably a bit overbought, extended from the moving averages. So if you're holding things and you've been holding them for a while, continue to hold them. If you're trading actively and you have great stocks, stick with them. But overall, if you didn't buy here or buy here or buy here, up here, just try not to chase, but, you know, start to figure out how you could buy some things on pullbacks and look for really good patterns.
Well, you know, leading up to the Fed announcement, we talked a lot about how we were ready for it. We were prepared. We were priced in for about 10 to 12 billion reduction in asset purchases. So now that that did not happen, when it actually does come time to taper, how do we brace for that? Like, could we get pretty thrown off by that because we're not as expecting it?
It's almost like the boy who cried wolf a little bit, because basically everyone thought he was going to taper, and the street was prepared for it, and I think they should have done it, but who the hell am I? You know, why not start the process? Why not get back to equilibrium? Why, with the stock market up 19–20%, why do you need it to be up 25% so more people feel a little dumb that they, you know, didn't perform with the averages? You know, you had some trends set, rates going higher, probably good for retirees in a nice strategic way. You had, you know, also gold and commodities on the decline, probably good for the U.S. consumer. So why not do that? But anyway, you know, you can't control the actual Fed. You can't control Washington. You can only control our keyboard and our process. And now, unfortunately, we're going to have to go data point, data point, data point. And bad news, I guess, might be good news when it was starting to get a little bit better, where good news was good news. So Main Street and Wall Street was starting to get on the same page. And now, you know, we're back in this little dislocation, which just makes things a bit frustrating.
Right, a little tricky. Well, you did mention gold, and we had rate-sensitive assets naturally perform best after the Fed surprise announcement. We saw gold close the day up 4.5%. How's the composure of that changed for you?
You know, it's funny. I just got like 2 emails when I sent out my notes saying that the great new bull market just was born yesterday. Okay, so we'll see. You know, first, a lot of steps have to happen before then. So you look at gold, you know, after actually, you know, here was your top, here was your intermediate decline, here was your macro support break, and now yesterday you had a key move. Okay, so I don't think they're going to be doing QE forever, but we shall see. Yesterday was a very potent day. We call this an igniting bar. What does an igniting bar do? It potentially ignites a new move. And I guess you could say, here's that blood on the street low, higher low, another higher low, and then here's this trend line that continues sideways to see if we could break above. I'd say if gold could stay above 31, you know, 50-ish, some short-term traders might switch some gears and start to look to buy pullbacks and play breakouts. But we'll see. Yesterday's high here is 32.16. Let's see if we can get above that and then see how we deal with that. I'm going to take it step by step with gold. I'm not declaring a new gold bull market here. All
right. Well, just show us the key levels to watch there in silver also, because silver finished the day up almost 6.5% yesterday.
Okay, let's go silver. Usually the tail of that wags the dog, right? So here you go. Let's see this trend. Okay, so ultimately, you know, lots of different trends here. Here's one, okay. Here is another. There's a lot of trends it's going to have to deal with. And then from here, maybe this is the lower one, okay? And yesterday was an igniting huge bar, okay? And some will say slowly again. Here is, remember we talked about how, you know, 17, 18-ish was a better buy than a sell. Well, you know, up here it got a little wishy-washy, and then look at this red dog reversal, a crazy one, where it went below this previous area of 2084, and then engulfed this inside range, filled this gap, took back the moving averages. So this would be your day one. So if the silver guys out there want to declare a new bull market in silver, they probably don't want to see more than 25% of this bar be retraced to show the power, and then it has to get over yesterday's high of 2240, and then you have this downtrend which is around 23, and then you also have the previous high. So before we get this new bull run and this historic move, let's let day one build. But again, that was a day to cover some shorts and figure it out versus be stubborn and saying, you know, that trend is going to change real quick.
All right, well, good roadmap there. But, you know, we've talked a lot about the 2013 theme of playing rising rates by going short the TLT and long the TBT. And yesterday, of course, we saw the TLTs rally, TBTs pulled off. Has your theme changed? How does that play into it?
Well, when you have a theme, you use a tier system, because sometimes they're more clear cut and sometimes they're a little tricky. And going into a big Fed event, we talked about how this could be a little tricky short term, because if it was priced in or if they did some kind of surprise, this upper area could resolve to the downside. It doesn't throw off the long-term thesis of putting something in the draw, you know, if that's what you do. So you look here at the TBTs and you will see that it's been quite a move since the gap up here back in May. Okay, very lengthy move too. Okay, here's your gap up. Okay, and then it held the 8 and 21 day this entire time. Then when it broke above 70, another new entry. And then since then, it's been following this trend. So if you got in right and didn't chase it up here, you're still just fine. If it happens to break below this trend line and it can't hold the 50-day, which it's been doing for the majority of this move, then you know the trade changes a little bit. It's going to need more time, and then perhaps we see a move to the 100-day down here at 72.91. So this has turned into a pent-up trade to the upside. To now it might take some time just to go back and forth and move down the list. But ultimately, you could almost draw yourself a little channel here too, where given some space, okay, because the trades do change and you don't want to be stubborn. You want to see if this area holds. And if it does come in and hold and we start getting some better economic numbers, who knows, maybe November, December, the trade will be back on. But ultimately, you want me to do a pistol to head kind of comment. This high right here will not be the high that we see in 2014.
All right, mark his words. While we're at it, we should just check in on the GDX, which also had a big move. The Fed gained 9%, got back above all key moving averages.
And investors and gold miners right now are declaring victory. Okay, you want to see the chart of the miners? Okay, this is the chart of the miners, okay? This is the trend that it's been in. Oh my goodness, from where it was all the way up here, almost years back. So if you got out of the way and didn't handle all this noise, this one day could have either got you in or whatever. There's no victory here yet, okay? And if this is changing, which it might, good. Switch some gears, because new trends are great. When new trends are born, they're pretty powerful. Some are saying you have an inverted head and shoulders pattern here, which makes sense, right? You have a little bit of a left shoulder, a head, or right shoulder. You could draw a trend line right here. Here, just like silver and gold is your day one, reclaim the moving averages. So, this stays above this area right here. It goes sideways, and you see digestion, and commitment. Then perhaps we break this trend. And if it is a new bull raging market, we'll see it, because obviously from 55 all the way down to here, it does have some room to retrace this move. And, as active traders, we could be involved, especially if we weren't caught in the mess.
All right, well, coming up, we're going to go in the trenches with some high beta tech names that got in motion yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some high beta tech names that got in motion yesterday as the trade continues. Take Apple, for instance, had a nice gap up above the 200-day and then held the gap and closed well off its lows.
Yeah, but the stock was so wishy-washy. It actually filled the gap pre-market, which we were all trying to get an intraday trade. And then intraday, it was just scalpy, which is just, it's unfortunate. For Apple, we liked intraday movement. And we got 2 days ago when it was down to below 450, there was a nice trade, that woke it up into support. But again, I think Apple still has a lot to prove, so you have to be really careful on your prices. You look at the chart here, you will see that once it broke this 503 area, it was a harsh move right back down to where it broke out from, where it actually had a nice move. So with that said, here was the moving average it held, and then it gapped above it, and you could say that it's looking okay. Just, you have to be in it instead of trading it too much. And now, you have another little channel here. So as long as it stays above, just say this 460, 461-ish, maybe there's a chance that it trades above yesterday's high of 466, 467 to retest this gap here, which comes a little bit closer to 475. But ultimately, it's trade by trade here. Not that exciting.
Google, though, pretty exciting move. It gained 18 points, closed on dead highs.
Yes, this stock started to get its mojo back about 2 weeks ago when it broke that descending trend line, and then yesterday broke above a flag pattern. If you look here, you kind of had to be quick. This was the support that it held. Here is when it broke this descending channel, gave you another move, flagged. And yesterday, guys in the chat room were looking to get long, and some did. Right when it went above this like 898. So if we could stay above 898, there's a chance at some point this year it's going to see new 2013 highs. It's back in play. Same way with Amazon. You take a quick look here. This was the retest of this area it broke out from coming in. Okay, it did go a little bit lower, but just like Google, descending trend lines, when they break, they could be powerful. Here it was. Then you had a nice flag we talked about on the price point sheet at 302, and now it's back at historic highs. Amazon has rewarded most people in all time frames except anyone that tries to just short it.
All right, let's do some quick hits here and check out some breakout candidates. We have Solar City, which triggered the actionable buy area of 3730 that was listed in the Off the Charts newsletter. Triggered that buy price yesterday.
Yes, but didn't have follow through yet. So it's going to be back on my radar today. You take a look at this chart. Elon Musk, one of his bad boys. You look here, when it potently broke this little downtrend, it's been flagging very nicely. I think if it can get above yesterday's high with some real volume, which comes in right around 37, I think that it's back in play. Could put this on the radar today. This could be good for cash flow.
And Green Mountain Coffee broke above the downward resistance that has been in place for about 3 weeks now. So could get some action there.
I could use more coffee trading this thing because it's so thin and so erratic. But anyway, it does look set up, and it hasn't been the exact trade that I would have liked. But anyway, it's holding above this prior breakout. It tried to go yesterday, but it was so hard to handle. Real volume has to come in. I guess you could, put down 87.50 above that with volume. Perhaps it makes new highs. Just be careful. Keep your size down. It's very thin.
Zillow closed on highs yesterday. It had nice gains of 1.6%, so because it closed on highs, maybe some follow through today.
Looks like it also, home builders just for psychology look like they're back in vogue with interest rate sensitive scenarios better.
Right.
Go here, I can't really talk, but I know we tried this trade a week or so back. And it couldn't break out, hurt some of us actually, and now it's flagging. Sometimes it just needs more time. So really gets above 101.50, perhaps it extends. It's been in a really nice trend for the majority of this year, giving you lots of little, price point or chart patterns. Here's one, it's digesting. So put that on the menu for a quick hit.
And Triple D's been on the radar since its breakout on Tuesday, and the stock's held up well. So still on the radar for that breakout.
This one has been a really bad trader. It's like you have to own it and say, I'm going to give it a little bit of a range and just let it, figure itself out.
Right.
It's not, rarely has it, I guess every now and then you get one of those days where you could buy high and sell higher. Anyway, you look at the chart, still looks really good for investors. You look here, I guess if this were to break above this area with some force, you then will get that 2013 trade, but definitely very choppy, more for someone who just sits in a little less size and just lets it go, but technically it looks still good.
And we've got Tesla basing at highs, so where do you think we could see it get back to 2013 highs? Above what level?
Two catalysts today. One, they came out saying that they're going to have those, it's going to have an autopilot feature, which is pretty cool, but I guess that's going to take time for people to trust.
Yeah.
And then someone came out and put a $200 price target. Technically, it's been a little quiet. It's still above the 21-day. I'm going to be focusing on it today also to see if we could finally get this breakout trade. You look at the 21-day, which it held. You look at this nice tight pattern. You know that Tesla does not like to be tight. Hopefully you have some. I have a little bit on. Starts getting above 171 and could hold it. That's your add. And then here's your 52-week high. Ultimately, this has been a great stock on most time frames to trade, but even better for investors that trust the Elon Musk story and don't look at valuations and PEs and get straight away.
So now with the Fed behind us, what do we focus on? Do we turn to earnings? What will you be focusing on?
Just to see, today the futures are up. I'm sure people are going to try and, short the spiders, which could be, a cute trade considering the type of move we've had. But I think where the real money is going to be made is continuing to find the stocks that are basing that look like you could hold them, staying in some type of portfolio approach, but a portfolio approach that can make you feel comfortable. You look at Sperling's VTF, he's got 30 stocks or so, sometimes more, sometimes less. Usually when I'm in portfolio approach, it's 4 to 8, and you would just want to stay with the trend. And you want to, do some trades at the inflection points, create some cash flow, then get back to comfortable. And at this point, I know there's a lot of hating out there right now in the world because oh, how could Big Ben do this? They're making the wealthy more wealthy, Main Street's detached, Everyone could make money from the stock market if you have a plan. Doesn't matter what type of capital you allocated, it's all percentage gains. And if you learn how to do it, you learn how to approach it on all different time frames, you won't be hating out there. You'll be like, wow, what a nice move. I'm glad I'm helping my financial future.
And that's your morning call for this Thursday. Happy trading. Have a great day.